Bitcoin surging to new all-time highs doesn't come as a surprise considering where we are in the cycle. By Sunday, we're at 1,000 days from the cycle low. Each of the previous cycles have lasted roughly 1,070 days, meaning there could maybe be just 2 months left on this cycle. But of course, we're going to see more crazy headlines trying to convince us that this time is different. There is a lot further to go. And of course, that means more time and more price, especially for anyone coming into the game at this stage of the cycle. Now, while all of this could be true, the probabilities don't lie in that camp. Our job is to make money from the markets and not get carried away with the constant noise and hype that we see out in the media. It's important to be aware of it, but knowing where its place is game changing. So today's video, we're looking at how time is running out, but of course not getting too down on everything. The bull market is of course here. We've broken past the 7-year resistance line, potentially still 2 to 4 months to go, as I'll explain in today's video. And there could even be bigger things brewing in the background. Major liquidity coming through to Bitcoin and cryptocurrencies as some of our major charts that we've been tracking here continue to fall over the last few days, getting close to the next support level. So hit the like, subscribe to the channel. There is a sale on TIA Premium if you've been hanging out for that. Link is in the top of the video description. Plus you'll also get the free reports that are coming out this week and of course today. All right, guys, let's kick it off with Bitcoin's current position. Nearly at 1,000 days since the cycle low. The importance of this, as I said, is that previous cycles have lasted roughly 1,070 days. 70 days from now could take us somewhere into October. But before we get to October, there of course are a few more pieces to the puzzle that are lining up for the rest of the cycle. Bitcoin touches record highs, fundamental changes, policy is also changing, monetary policy. And at this stage, I think the traditional markets are potentially front running a possible rate cut. Of course, it shouldn't come as any surprise by now that even when the market believes there is a rate cut, as we've seen for the last 12 months in the US, we didn't see the rate cuts. We basically saw pauses, and any expectation of larger cuts were either met with a pause or a lesser cut. Now, there is not even an expectation that the interest rate is going to remain on hold, 4.5%, which is where it currently is. The expectation is almost 100, well, it is 100% there's going to be a cut, with 93% a single cut here, or 6% at the moment looking at a double cut. So for the rest of the year, there is an expectation that the following meeting is going to be cut and then another cut. So basically 2 more cuts from that point if we get the cut in September. And so that could be part of the front running that we're seeing on the markets, expectations that there are further upside, and that is also leading to more liquidity into things like Bitcoin, crypto, and ETH. Now, although bull markets produce some crazy headlines, huge price targets, they also produce relatively strong trends, nice simple trends to be following. And if you're understanding how to follow those trends, you can make some significant coin, as our premium members have been making. This has been one of the largest trades we have seen, 400,000 US dollars in a month, based on the strategies that we teach in TIA Premium. Learn how to trade or long-term invest so you can remain with the cycle throughout the years to come. You can continue to build on your nest egg. If you're ready to improve your trading and investing and get your financial security together, then join TIA Premium. The sale is on today. Over 1,500 members are going through our classes, courses, live streams, asking questions, and putting themselves in the best position for this cycle. Use the link in the top of the video description, name, email address, and you'll get notified as the sale goes live today. The final boss, grand final stage, October is the line that I have drawn here. So giving us roughly 2 months until the end. Each of the previous cycles have run 35 months. So that's 2021 and 2017 being 35 months as well to the top. And that was a major blow off move there for 2021. Some of the fractals are lining up, which look really interesting. And I'll have that for you in today's video. Now, 2013 was slightly longer here. We're at 37 months. This is from where we've pointed as the cycle low, looking at the anchor point here for October 2010. That runs into November 30th of 2013. So basically a day short of giving it another month there. So looking at roughly 35 to 37 months, first resistance point in time looks at October. We take it out to 2 more months. That could take us through to December. So it could extend from this point, but it's still in that Q4 period. And I think what happens next is going to be the important part, especially if the market is in fact front running the potential rate cut. And then once we get to that news, basically a buy the rumor, sell the news type of event, we then see the prices pull back. So from this point forward, it's important that Bitcoin can give itself some breathing room from all of this congestion, start to run higher into those dates. And then if there is a pullback like we've seen in the past of 15 to 33%, not calling for 30%, but this is what it has done already in this cycle, then that breathing room gives it a chance to come back to the previous resistance, flipping it into support. So although we don't have that price right now, I've talked previously about price targets. And the next price target I'm looking at is in the mid 130,000s, which is part of our extensions. So if you missed that video, there is a link to it at the end of this one. Go back and check this video right here. Now, as part of the final boss or the grand final to this entire cycle, I think the USDT dominance holds that key. So the opportunity here is a breakdown of 3.7%. This is the area that held the market up at each of the previous all-time highs. This was 74,000, this was 108, this was 109,000 for BTC. And at the moment, it's basically been playing a trading range game. On the way down, money flows into Bitcoin primarily, and then alts, and not necessarily ETH at that time. As it rallies, money flows out of everything back into the dominance, back into the stable coins. This time, however, we've begun to see more of that money flow into Ethereum. So it could be that we're on that verge of lower highs and lower lows being formed on the stablecoin dominance, which could lead to even more money flowing out of the stablecoins and looking for those gains in Bitcoin, ETH, and the rest of the altcoin market. Now, if this does break down, this is going to be the key that I'm looking for a top on the market. We're not there yet. I know talking about tops can trigger some people. We're not trying to do that. It's trying to look out for it so you can take profits. If you're not about taking profits, then you found the wrong channel. We're about taking profits here. So the breakdown between 3.7% and 2.5% could lead to where the market begins to find that next top. And if you see that, you see some sort of base forming and strength in the dominance chart begin to form. This is what strength is here, and you see the move higher. That would unequivocally mean that Bitcoin and cryptos are potentially about to top. Time is getting close at this stage. Prices have rallied. We're seeing crazy things going on. We're seeing even the traditional finance space begin to front run a lot of what is happening in the markets. And so if we did get into this space and saw the market run back up in case of the dominance, then we could be on the verge of, well, the end of the cycle. But we're not there yet. So let's keep enjoying the party at this point with this further downside. Now, the combined stablecoin just broke down from its 6-year support level, looking back to 2019 and all of the previous support levels that came through in 2020 and 2021. So this could be part of the entire picture with more of that stablecoin flowing out, so more liquidity for Bitcoin, ETH, altcoins. So this is all very, very positive, bullish news. Positive for the bulls, not so for the bears. The next level to the downside is about 4.8%. It breaks through there, then we'll be watching again for basically major liquidity, as I've got here, into the cycle top between 3 and roughly 5%. That's the area that we're looking out for next. More good signs with the market sentiment remaining around greed. We haven't hit the extreme greed yet, and it's good to see that it continues to hold in this greed. Even though Bitcoin is jumping to new all-time high prices, it's not getting carried away with that FOMO that we typically see at the highs. At the highs, we also see a major uptick in search volume, crypto, Bitcoin, and in this case, we're now looking at Ethereum with how much interest there has been. With Ethereum in the yellow down below, you can see we've hit new fresh highs for this cycle. For Bitcoin, not yet, and for crypto, very close, if not onto that right now. 27 at that last peak, and we're dead on 27 to today. So this is a major outlook here. Crypto beginning to break into new, fresh, all-time high search volume. As for Bitcoin, hopefully we still have a lot further to go. You can see this high here sitting at 67. And this is for the overall cycle that we can now combine the two, as this is 5-year data. If we take a look at the last 12 months and 90 days, slightly different picture here where things are starting to get a little bit overheated in the short term, but the long term, still further room to go. 12 months, Ethereum, fresh highs, crypto, fresh highs, Bitcoin, not yet. So that's still a good sign. And then for the 90 days, the very short term, Bitcoin, new fresh highs for the last 3 months. It can keep running, of course. Crypto, new fresh highs, and Ethereum also fresh highs and running away there. So it is getting a little out of hand in the short term, but of course, short term, it can keep running. The longer term is what we're most interested in, and we haven't got to those points yet. Daily exchange volume still hasn't cracked the highs here at 100 billion, so still good signs that there is further to go in the cycle, meaning that there could be more money coming into the exchanges. The positive here is higher highs and higher lows. Taking a look at the blue line in the background, nice to see that it was able to support the amount of trading volume that came in over the last week, putting in a higher low at 44 billion and starting to move higher again. Now, what we typically see at the end of the cycle are crazy targets, 340,000. But in this case, you'll note that the author is referencing me. So I just had to throw that in there because sometimes the headlines get carried away with thinking that this price is going to go to 340. But if you'd watched the video on the channel, looking back at a couple of these and also my X post where this particular article comes from, is we're talking about how it is unlikely to exceed the previous cycle's returns. So the previous cycle did around 2,100%. And this current cycle, if it were to do, Bitcoin were to do 2,100%, means it would have to go to 340,000 or beyond. Of course, there's always that slight chance, throw a 1% in there if you wish, but it's probably very unlikely. The forward returns, looking at what's going on for these last few months, we've had a lot of green months here. So we're starting to get extended in the move to the upside. Bitcoin's now been up for 4 months. We're into this 5th month. And in the Gann analysis, also in the swing chart, 4 months to that upside as well. So eventually we should see some sort of correction, but I wouldn't be waiting for that correction to begin loading up super heavy. You just don't know how far this thing is going to run before you do see the correction. Now, if there is a correction, we'll be following something similar to 2017. You can see through here, July, August, September, bit of a pullback and then a big run to the end. 2013, only a slight pullback here. You can see for September, there was a pullback, but the month ended up closing slightly green. And then a nice big run to the end of 2013. And the other metric we've been watching is green July and green August could lead to a red September, and also the green July with a red August can also lead to this green September and a nice flurry of green months following towards the end of the year. And that is looking back at the 10-year cycle and the 5-year cycle. Green July, we've got a slightly green August here. The red came in September, but the end of the year was also strong. And that shows up in our predictive cycles. So the purple line is our custom. We're looking at 2017 and 2021. And the red line here is looking at the 5 and the 10 year. We can see how well the cycle has been tracking for this year. So 2025 looking quite similar in terms of the structure, the pattern of the market, with the decline into the late Q1, early Q2, a rally out of that period. And what typically follows, if we're combining the two, is a pullback in late Q3. Now, if there is a big move to the end of the year, I suspect we're going to see more headlines of Bitcoin taking over different market caps. It's got a lot of work to do to get to Apple's market cap here at 3.4 trillion currently, and of course Microsoft at 3.8, Nvidia, which crossed 4 trillion just the other week, now sitting at $4.4 trillion. It has got its place here at 5. Silver is also up at 2.1, and of course gold is nearly 10 times away at $23 trillion. So I think there's still going to be a lot of comparisons between Bitcoin and gold in the headlines, and also a lot of comparisons with where these other market caps sit. As for altcoins, it's on the verge, as it has been for quite some time, but this one here is the most important one, looking at an overbalance in time and price. So this is the Bitcoin dominance, potentially correcting further in price and in time, which is what we need to see for the altcoin season, for something mega to happen. So it's the first stepping stone here, because we haven't seen it on the way up. That's been the entire cycle there. These corrections have been relatively short-lived, barring the November and December correction on the dominance, which of course led to a big altcoin season. And now we're just a few ticks away from overbalancing this particular move here. The time has been longer. It's been down for 2, 4, 6, 7 weeks into the 7th week. So that is definitely longer than that period there. But in terms of the dominance dropping, it hasn't gone as far in price. And that level will come out around 58.5%. So I think once we can get there, then we're going to start seeing some of those fireworks come through into altcoins, probably a little more into ETH once it's able to consolidate this move. And for Ethereum, there's been a lot of consolidation with the ETFs. A lot of ETFs have been bought up. The flows have been coming in through August. We looked at this yesterday with the $1 billion worth of ETH. Now the total for the month is somewhere around $2.3 billion. This, of course, leads to more of the headlines with crazy targets. As we looked at in the previous video, why some of these targets are just absolutely insane based on the market caps and where that money sits, of course. $25,000 now by 2028. Not only that, it could hit these numbers, right? But the important thing to look at here, so regardless of what you believe ETH is going to be worth, what happens at these stages of the market is any sort of companies that have been public about their targets, they now raise their targets. And in this case, massively raise their targets. This is something that happens almost every single time as the markets run up. And as you see them come down, these companies will start to change their targets again. They'll drop them, and then they'll drop them even further. It happened in the Bitcoin bear market. Companies were talking about 15,000. By the time Bitcoin got to 30,000, they started to drop their targets to 10,000. And then when Bitcoin got to 15,000, they then dropped their targets to $9 or $6 or $3,000. So the target just kept getting lower and lower and lower. And the same thing, I think, is happening now at the highs. Now that ETH is at 4,700, they start to raise their targets to 12 for next year, 18 for 27, 25. They're not even factoring in any sort of correction. Like ETH is corrected every single damn year. It makes no sense. Cumulative ETH holdings by public companies have skyrocketed over 20 times in the last 2 months. 48,000 ETH, now sitting at 1.2 million ETH holdings. Think about that for a sec. Ultrasound Money shows ETH at 73,000 being created this year, whereas if it was still on proof of work, you'd have nearly 400,000 ETH. So a lot less ETH has been mined or produced now that it's not being mined anymore. And there is still some getting burnt, but that's a lot less. So it would be interesting to see how this continues to play out towards the end of the cycle. Currently nearly 121 million ETH in supply. And over the course of the year, there is still 972,000 ETH being produced. So this number really does need to keep up with how much is being produced. They've got $1 billion that they're buying. They've bought 500,000 ETH. The network's produced around 450,000 since that merge took place. But looking at the ultrasound money here, ETH issuance is up at around 972,000 ETH per year. So they need to keep picking up there. The thing that I hear often is that the ETH treasury company spokespeople, they all say some version of the same thing here. Price is going up because people are buying, and companies and treasury companies are buying, and price is going up. Therefore, it's a shortage. Nothing has really fundamentally changed here for Ethereum. It's not to have a go at it. It's just that's what's happening in the background. And But at the end of the day, as long as price is going up, do you really care what's going on out there? If you're worried about the fundamentals, then really nothing has changed. So it's important to pay attention to what price is doing. Are the buyers still stepping in? At the moment, they have been, and we saw one of the largest days this week. So if we start to see a slowdown, probably not a bad thing, especially with where ETH is sitting right now. It has broken past the 4,000, the 4,300, which was our next price target, and it's now eyeing off the old all-time high to break into a new all-time high. This metric down below is your Ethereum ETF. You can find that on your indicator suite as well. Click over to your dashboard. Tons of new indicators for you to use there for your trading. So the ETF inflows have been picking up, obviously, new fresh highs. I think any sort of consolidation at this point, provided it's above $4,100, is going to be a good thing for ETH. If it keeps going higher, so be it, but we're going to need to see some sort of consolidation and no significant breakdown past that $4,100 level. ETH BTC is up around the next resistance level. This is the nearly 10-year resistance line. You can see October 2015 is the ETH BTC low, pinned to the next cycle low around September of 2019. It broke down late last year and has since recovered to that point. So it's getting close to breaking through this level, and my next target above the 4% area where we currently sit, 3.8 to 4%, is the 50% level. So the 5.3%, and the overbalance in time and price. That would be overbalancing this significant move here where ETH outperformed Bitcoin. That move right there, should it do it and consolidate above 3.5%, that's where we could say ETH could be being sent to the moon. 20, 30, whatever $1,000 target could really be on the cards. But until that point, we've got a lot of work to do here for ETH BTC. Now, a lot of work is a good segue into a lot of work that the members are doing. So TIA Premium is on sale, 660%. Congratulations, Giovanni, on your ETH trade, Bitcoin trade, and Heroic got another 60% on his Bitcoin trade as well. So well done to you guys, crushing the numbers here. Back to the cryptos, and XRP, before I get into a couple more altcoins, is at 58 weeks. If you've been following the time frames here, we're getting very close, if not somewhere there, towards the end of these time frames. Ideally, we see some sort of big move here from XRP to take it through $3.60. As it currently stands, sitting at $3.30, a little overhead resistance at $3.40 until we can hit those $3.60 numbers. The importance of this time frame is XRP has never gone beyond that set amount of time in any particular move. The rough 13 months has basically been the stopping point for a move on XRP. And if we start to see a shift in narrative towards some other altcoin, of course, Ethereum's taken the show now for the last couple of months. XRP's basically been on the sidelines since it did its big pump in November, with just a brief move here in July. It really needs to come back into the spotlight to then boom to this final top. The only saving grace I've got here is a potential 42-month move, which would take it out to roughly late November, early December. And that 42-month move comes from the 2014 low to the 2018 top. So this is the saving grace for the mega move to the upside. Either way, that would still leave us with about 15 or so weeks left. So some good things could happen there for XRP. Solana is pushing through, cruising through that $180, which was a resistance. And if it's able to close above 195 at the end of this week, that would be the first time it's closed above its 50% of the bear market this entire time. So that could be some strength there beginning to form for Solana. The other day we looked through Sol ETH, which has been on a pretty significant decline here. So the strength versus Sol and ETH could begin to turn if it finds some support at the previous support levels. So I wouldn't be trying to brush any of them off anytime soon. And Sui is back on the rise here, climbing above $4 today. Resistance around there at $4.40. After those levels, this one here looks like one of the stronger ones. It's getting very close to those all-time highs. From the April low, it's now up 137%. with a peak at 160%. So still a ton of strength showing for the traditional markets, especially leading up into this news announcement that everyone is expecting a rate cut. It really does look like there is a bit of front running going on here with new all-time highs for Bitcoin, new all-time highs for the S&P 500, new all-time highs for the NASDAQ, new all-time highs around the globe on some other global stock markets as well. Huge moves for the home builders ETF in our 18-year cycle, which I'll cover in a future video. This video's gone on long enough. And the front running looks like it's continuing with the yields and the bonds. The yields continuing to fall with the interest rate cut announcement expected, but not guaranteed yet. And of course, the bonds also climbing here. And this is off the back of the extreme fear that happened 3 months ago in May, when everyone thought it was all collapsing. And finally, the US dollar is also declining, continuing to decline slowly here. And I think that's part of the expectation that there's going to be a further rate cut there for the US. All the interest, the excitement happens to be with ETH, Bitcoin, new all-time highs, and of course, any of the altcoins if they can make it further. Okay, let's watch what happens here over the coming days as we head towards that 1,000-day into the cycle so far. Like and subscribe. Sale is on. Link in the video description. I'll see you guys at the next one. Cheers.